Let's talk about private markets and figure out what is happening there. Huge, obviously, momentum this year. We continue to see a lot of money being allocated to this space. Does that continue? How much more can we actually see being allocated to this space? Joan Solotar, Global Head of Private Wealth Solutions at Blackstone, joins us now around the table. Good morning.
Good morning.
2024 was a year of momentum for your industry. Does it continue next year? How much more can this industry see allocated to it, do you think?
I think it's super early. If you think about the path of travel for institutional investors, 20 years ago they were allocating 5% to privates. Today it's 25% for U.S. pension funds and over 50% for foundations and endowments. Individuals are by and large under 5%. Almost anywhere you go in the world. So I think we have a very long road upward
So
from here.
the opportunity is in the individual rather than the institutional. Is that where the greatest opportunity lies?
Well, my focus is on the individual.
Yeah.
There's still room and you're seeing growth on the institutional side, but I think there's tremendous opportunity for individuals and for insurance companies. You're starting to see them allocate more as well.
You've grown this the private wealth solutions business, Joan, into a giant part of the overall Blackstone business. You've done that by partnering in a lot of ways with banks and other parts of the financial services spectrum. I wonder how much more. You clearly think there's much more to go for here. Is it getting more competitive though?
It's certainly more competitive, and I think the positive of that is you have a lot more institutional quality firms now providing funds to individuals. They're out there educating advisors just like we are, but it is so early. It doesn't matter where I travel in the world. I was just in Asia. I've been spending time in Europe, US. Every firm wants to allocate more to privates. They're talking about these as ways to enhance total return, income, provide diversification for stocks and bonds. So I think it's, again, I think it's quite early.
Yeah, so it's quite early. And obviously the private space and the private wealth solutions that you allow individuals to access is quite varied, isn't it? Anything from private equity to hedge funds and the like. Where do you see the most excitement right now? We've talked a bit about private credit this morning with certain guests. We've talked about private equity. We had some news about Apollo trying to raise the biggest ever fund to attract more money into private equity. Where are you most excited about at this point?
So I'd say today we have the most interest in private credit, where you're getting a big spread to what you could earn in traditional fixed income or cash. We're also seeing quite a lot of interest in private equity as well, and infrastructure. I'd say the one sector that I think has been a sleeper, but I think in 2025 could see renewed energy, if you will, is real estate. It's been probably the only sector that's lagged, but the sectors we like within real estate bottomed the beginning of the year. Interest rates coming down certainly helps on the valuation side. So I think you'll see momentum build there. But to date, as you mentioned, it's private credit and private equity and infrastructure.
So we keep hearing this conversation that private markets are the place to be, and everyone wants a piece of it. And we were just talking to Ann Walsh as well about the overtaking of these markets from the private space over to the public ones. But how do regular, everyday investors who are so used to being exposed to a stock market get involved with the private markets? It feels like it's something that the ETF market is trying to tackle with varying degrees of success. How do you access it if you're not a large-scale institutional player?
So there are a lot of structures that are now accessible to more people. If you went back in time and you only had the traditional drawdown funds, those you're only allowed to offer those to the uber wealthy based on regulations. But today we have open-ended funds in all of the sectors that I mentioned, and depending on the country, you could access those with a minimum of $10,000 in investments. Some countries it is higher, $200,000, $250,000, but that's much more accessible than it was where the previous minimums were $5 million.
Where are the cracks then? Give us the juicy stuff, Joan. This all sounds great, but isn't that always the case? And before something falls apart, everything sounds really, really great. We've been covering private markets this all year, really, and every time I speak to someone, whether super return or EPAM, it's always been this enormous optimism around it. But I think we've learned in previous iterations that when everyone is bullish on a sector, maybe that's when you have to start paying attention to the cracks. Are you seeing any cracks at the moment?
I'm really not, and I would say private isn't a sector.
Yeah.
And each of these sectors will be cyclical, right? And so the way to think about it is if you're talking about private equity, it just means these are companies that aren't publicly traded, and they actually account for 90% of the investable universe. And the same in commercial real estate.
Yeah.
Over 90% of real estate's private. So if you're only accessing the public markets, you're really just fishing in a pretty small pond.
But in the context of some of these deals and these financings having more covenants attached to them, a little bit more complicated in structure as you see more and more people allocate to it, is that a concern? I mean, Jamie Dimon, I keep going back to this because it was such a juicy quote, has compared private credit to the mortgage crisis in the mortgage market prior to the GFC. Is that a fair comparison?
I don't think so at all. First of all, again, it's you go back in time, but those mortgages were held by very levered institutions. They were based on customer deposits. But what is private credit? These are funds, you're matching liquidity terms, these are senior loans. That just does not speak to any kind of bubble environment.
Okay, so mood's still good in that particular sector. Joan, whilst we have you here and we are at the Women, Money and Power event here in London, I thought a nice time to reflect on the role of women in financial services. And the reason I thought of asking you is I read something you wrote more than 10 years ago, advice to your daughter in the Harvard
Yes.
Business Review. And you were talking about shouting louder about women's success stories rather than focusing on the things that women can't do. Do you think the conversation has caught up with you on that? Do you think we're better at doing that now?
I do. First of all, I think there has been significant improvement and change, and there's always room for more. But when I started in this business, there really were very few women. And even when I started at Blackstone, the percentage of females in the analyst class was quite small. It's about half now. And my focus has been on sharing success stories and what works, rather than just getting stuck in a negative conversation of what doesn't. We have so many examples of women who are successful in finance.
My advice, by the way, my advice to my daughter is to go to school if she's watching.
If she's watching. What time is it?
That's the first step, isn't it, on the journey? But yes, there we are.
Education. Is there enough momentum? Is the momentum building? How do you see it developing going forward from here? In 10 years, Anna took us back 10 years, and 10 years from now, do you see that there is now a big enough base coming through, a strong enough cohort coming through, that relationship is now so embedded in the system that not the hard work has been done, but that it's going to become easier? The pyramid just has a wider base now to build from.
I do think so. So to your point, if you think about the top of the pyramid, we still have progress to be made. If you look at percentage of women CEOs and the like, whether it's Fortune 500 or wherever you are in the world. But if you look at the base, if you look at the middle, even if you look at partner level at firms, just many more women than there were 10 years ago, and that would suggest those women will continue to rise.
So what needs to happen next?
What needs to happen next?
What needs to happen next to make sure that the top of the pyramid is as well populated as the bottom?
Events like this one, maybe.
I agree. I think it's really incumbent upon successful women and men to continue to mentor and sponsor and push people forward who are talented. That's what I try to do day to day. And I see many more female partners, not just at my firm, but at peer firms. And that's real progress.
Yep, and go to school.
Yes, definitely go to school.
Joan, lovely to see you. Thanks for stopping by to see us. We really appreciate it. Thank you so much. Joan Solotar.